Ever wondered how you can book a week-long Caribbean cruise with drinks and Wi-Fi included for under $200 a day for two people? MSC Cruises isn't cutting corners. They're using secret business tactics from a global shipping empire that's quietly subsidizing your vacation, and most passengers have no idea. Hey everyone, welcome back to the channel where we uncover the real deal behind travel bargains. If you're dreaming of your next cruise but hate overpaying, you're in the right place. Today, we're tackling a hot topic: why MSC Cruises are so dang cheap. We're counting down the 12 biggest reasons, revealing those secret business tactics that let them undercut the competition. I'll keep it real, conversational, and packed with insights so you can decide if MSC is your next vacation win. Let's jump right in, starting from number 12. Reason 12: aggressive market expansion in new territories. All right, let's kick this off with something that's all about growth hacking. MSC Cruises, originally a European powerhouse, has been laser-focused on breaking into the North American market. Why does this make them cheap? Simple. They're willing to sacrifice short-term profits for long-term dominance. By offering rock-bottom fares on U.S. departures, like those insane $99 two-night cruises or $200 per day deals for a week, they're basically buying market share. Think of it like a startup undercutting prices to steal customers from giants like Carnival or Royal Caribbean. This tactic floods their ships with first-timers who might become loyal fans, but it means they're operating at slimmer margins initially. I've seen deals where a family of 4 sails the Mediterranean for under $1,000 total, unheard of elsewhere. The catch? Once they're established, prices might creep up, but right now, it's a buyer's market. So if you're in the US, snag those promo fares before the secret's out. Reason 11: lower debt burden from the pandemic era. Moving on to number 11, and this one's a bit of a history lesson with big financial perks. During the COVID shutdown, while most cruise lines were parked and piling on billions in debt, MSC had a lifeline. Their massive cargo shipping business kept chugging along. MSC Mediterranean Shipping Company, their parent, is one of the world's largest container shippers, hauling everything from bananas to electronics. This steady revenue meant MSC Cruises didn't rack up as much debt as competitors who had to borrow heavily to survive. Less debt equals lower interest payments, which translates to more flexibility in pricing. They can afford to keep fares low without needing to hike them to cover loans. For example, post-pandemic, MSC bounced back faster, launching new ships like the MSC Euribia without the financial hangover others faced. It's like having a rich uncle bankrolling your party. Your drinks, or in this case cruises, stay cheap. Reason 10: economies of scale with a massive fleet. Number 10 is all about going big to save big. MSC boasts one of the largest and fastest growing fleets in the industry, with over 20 ships and more on the way. Building in bulk means they negotiate killer deals on everything from construction to supplies. Their ships are standardized in design, which cuts costs on maintenance and training. Why cheap for you? Spreading fixed costs like fuel, crew salaries, and port fees over more passengers and voyages drops the per-person price dramatically. Imagine buying wholesale versus retail. MSC does that on a mega scale. A 7-night cruise on a ship like MSC Seashore might cost half what a similar itinerary on a smaller line does, simply because they're filling 5,000+ berths efficiently. Plus, with ships sailing year-round across Europe, the Caribbean, and beyond, they minimize downtime. It's smart business that keeps your wallet happy. Reason 8: upsell mastery. Low base, high add-ons. Number 8 is where the psychology kicks in. MSC's base fares are dirt cheap because they strip out extras like drinks, Wi-Fi, and specialty dining, then upsell them hard once you're booked or on board. It's like budget airlines. Pay peanuts for the seat, then fork over for bags and snacks. This model generates massive onboard revenue. Think 30 to 40% of total income from packages like Easy Plus drinks or excursions. Why low up front? It hooks budget hunters who think they're getting a steal, then converts them to spenders. For instance, a $500 cruise might balloon to $800 with add-ons, but that's still less than competitors' all-inclusive rates. The tactic? Tiered experiences like Bella, Basic, to Yacht Club, Luxury. tempting upgrades. It's brilliant. Low entry barrier fills ships, upsells pad profits. Just budget wisely or you'll miss the cheap part. Shifting gears to number 7. MSC doesn't just sail to ports, they own them. Through partnerships and direct ownership, they control key terminals in places like Miami, Ocean Cay, their private island, and several in Europe. This vertical integration cuts out middleman fees, which can be hefty port charges passed to passengers. Owning infrastructure means lower docking costs, priority berthing, and even revenue from other lines using their facilities. It's like owning the stadium instead of renting it. Result? Savings trickle down to fares. Their private island, for example, eliminates expensive port taxes elsewhere, keeping Caribbean cruises affordable. Competitors pay up to $20 to $30 per passenger in fees. MSC pockets that. It's a secret weapon in their cost-cutting arsenal. Reason 6. Building ships in their own backyard. Reason 6 is a game changer. MSC owns shares in shipyards like Fincantieri in Italy and Chantier de l'Atlantique in France, where they build their vessels. This insider access means cheaper construction costs, no markups from third-party builders. They customize ships for efficiency, like larger capacities without extra frills. Building costs can be 10 to 20% lower, and with a pipeline of new megaships, they're amortizing expenses over decades. Why cheap cruises? Lower capital costs means less need to charge premium fares to recoup investments. Ships like MSC World Europa with 6,700 passengers are built to pack them in profitably. It's family business at its finest. The Aponte family, who owns MSC, leverages this for unbeatable economies. Number 5. Higher passenger density on ships. Number 5 might surprise you. MSC packs more guests per square foot than many rivals. Their space-to-guest ratio is lower, meaning ships feel busier but costs are spread thinner. For example, while Royal Caribbean might aim for luxury spacing, MSC maximizes berths. Think more cabins, larger atriums for revenue-generating spots like shops. This boosts capacity without proportionally increasing crew or fuel needs. The math? More passengers sharing fixed costs equals lower fares. A ship with 5,000 guests versus 3,000 on a similar size vessel drops per-person expenses by up to 40%. Sure, it might mean longer buffet lines, but for budget cruisers, it's a trade-off worth the savings. Data shows MSC's density is among the highest, directly tying to their 25% cheaper average prices. Number 4. International crew from cost-effective markets. Diving into number 4, staffing smarts. MSC hires global crew, often from countries with lower wage expectations like the Philippines, India, and Eastern Europe. This keeps payroll one of the biggest expenses at bay, with passenger-to-crew ratios around 3-to-1 versus 2-to-1 on premium lines. They train efficiently and rotate staff across their fleet. Why cheap? Labor costs can be 20% lower than US heavy lines. But don't worry, service is still solid, with multilingual teams fitting their international vibe. It's not skimping, it's strategic sourcing. Competitors with higher union wages can't compete on price without cutting elsewhere. Reason 3. No shareholder pressure for quick profits. Top 3 now. Reason 3. Private ownership magic. As a family-run biz under the Aponte family, MSC answers to no Wall Street shareholders demanding quarterly dividends. They play the long game, investing in growth over immediate returns. Public companies like Carnival must hike fares to please investors. MSC can keep them low to build loyalty. This freedom lets them absorb losses in new markets, while the shipping arm covers the tab. It's freedom from stock market whims equals sustained cheap deals. Reason 2. Subsidized by $1 billion cargo empire. Almost there. Reason 2 is the big reveal. MSC Cruises is basically the fun side hustle of a $1 trillion shipping giant. MSC Group hauls 20% of global container cargo, raking in billions annually. This cash cow subsidizes cruises, covering overheads and allowing loss leader fares. Your cheap balcony? Partly funded by that container ship next door. Competitors don't have this backup, so they charge more. It's cross-subsidization at its finest, turning cargo profits into cruise bargains. And the number one reason MSC is so cheap is they prioritize volume sales over premium luxury perks. Instead of gold-plated everything, they offer solid, fun cruises at mass market scale. Think big ships, diverse entertainment, but without the frills that jack up costs. This high-volume model, like Walmart versus Nordstrom, drives down prices while maintaining quality. It's not cheapskate, it's accessible cruising for all. Whew, that was a deep dive into MSC's playbook. To wrap up, these 12 tactics, from cargo subsidies to smart staffing, explain why MSC undercuts everyone without sacrificing the core cruise experience. If you're after value, they're a smart pick, but remember to factor in upsells. What do you think? Is MSC's model genius or gimmicky? Drop a comment below, like if this helped, and subscribe for more travel secrets. Hit that bell so you don't miss our next video on cruise hacks. Thanks for watching. Fair winds and following seas.